Hello, Wycoffians. Welcome to Power Charting. I'm Bruce Fraser, your host. A most important session today. We're going to talk about risk management, but we're going to talk about it from a long-term perspective, how to separate really the good ideas from the not so good ideas, how to separate the leadership from the laggards, and how to participate in important uptrends and how to avoid important downtrends. So with the markets becoming ever more rocky and volatile, and we have been documenting this over the past number of weeks, really going back to November with our Wyckoff analysis. And I'd like to take a minute to bring that up to date and then move on to our studies of the risk management characteristics and industry group analysis. And so here we can see what we're going to do today. We're going to take a quick look at the S&P 500, NASDAQ 100, and then also turn our attention to bull trends and bear trends, how to use industry group analysis to be able to identify those and participate in them. And with that, let's move on to this particular chart, which is the S&P 500. And let me get my annotation tools here because we want to be able to draw stuff. And there we go. Okay, so note that we started to see climactic behavior into this buying climax in early November. And this was after preliminary supply, automatic reaction, which was a deep reaction down to the bottom of the channel, back up, back down, didn't get to the bottom of the channel. But we at this time started to indicate, drawing a resistance line, that we were in a range-bound condition. And this range-bound condition was something that we needed to respect. And in fact, we can see that really technically we're still in a range-bound condition. So the weakness that we're starting to see here is predominant. And one of the things we talk about is how preliminary supply, often roughly equal last point, sets up the conditions for distribution. And you can have multiple last points of supply as a distribution formation forms before you can have that big cascading markdown phase that occurs at the end. And so patience is really important. It's important to be thinking about tactically where you want to trade these volatile swings, how to trade them at all. And I'm going to talk about how we can use this trend analysis to just identify themes that are emerging, submerging, things we want to participate in, and other areas that we want to avoid, and how to do it in a very straightforward way. Now, looking at this, let's turn our attention now to, let's turn our attention to the NASDAQ. And here you can see that this picture is a little more bearish, let's say, in the regard. Here we draw the supply line over the top, preliminary supply, big deep reaction. This really was a very important sign that we may be in the process of building an early clue, building distribution. And then we go up, accelerate into a buying climax. It goes up, touches this supply line, and then has a reaction. This is a range-bound condition. I didn't draw resistance here, but we rallied back up to this point and then failed heartily and down and out of the channel. Very important decline. And here I would like to show you the effects of the bullish percent on the NASDAQ composite. Now, this isn't the NASDAQ 100. This is like really all of them, all of the NASDAQ composite stocks. And this was making a series of lower highs really all the way through the spring and into this final top that was being made October, November, December. And the area that I want you to focus on in your own analysis is look at the 50% level. Bullish percent, go look this up in the StockCharts school, university, but look at the definition of bullish percent. These are bullish percent buy signals in the point and figure charts. And it's really a wonderful indicator of breadth. And so in each one of these rallies, you have less participation of stocks going onto a bullish percent buy signal. That is a sign of internal deterioration. And we are seeing that here, and downward it goes. Look at where it is. It's below 50% and living there at the point at which this final upthrusting test of the buying climax takes place. And there's so few stocks now below 50% that are supporting this market that from this low level, there is a tremendous amount of price damage that is done from here. And this is the way it happens. This is the way distribution occurs. This is the reason we look at these indicators, because they tell us when there's termites in the foundation. And we want to be able to see whether or not the foundation is super strong or whether or not it's under deterioration. Here, very clearly, we can see that. We didn't look when we were looking at the S&P. Let's go back to that for a sec, because note that here is another way to look at breadth. And this is the stocks above their 200-day. Now, 200-day, and here is the 200-day right here, this red moving average. 200-day is a very long-term sort of a trend determination moving average that I like a lot. And when the market is, or the stock, or whatever it is that you're studying, is above the 200-day, the 200-day is rising, that is a really good definition of an upward trend. When stock or index is below the 200-day, the 200-day isn't turned down, that's a classic definition of a bear trend. We're going to look more at that here in a minute. But note that on the aggregate, all the stocks in the New York Stock Exchange here, there are fewer and fewer of them that are participating in the upward move of the market by being, by definition, in an uptrend above the 200-day moving average. And this is not happening. Look at the low level, around 50%, just slightly above it right here, and the very sharp break that follows in the index itself. And this is after an upthrusting action where the S&P actually goes to a new high. People were really calmed by the S&P making new highs. We were looking at these characteristics and saying, you know, we are at least in a range-bound condition, and potentially we're under some kind of distribution. I'm not ready to say that we're ready to mark down into an important decline here yet, but there's a lot of volatility. The more volatility that you get later in the structure of a range-bound condition, the more it convinces us that there is tremendous risk. And keep in mind that the internal underlying conditions, looking bullish percent, stocks above their 200-day, is saying that the individual names that are in these indexes, in these exchanges, are acting poorly. So you may have a portfolio of stocks that are in confirmed downtrends and having really a poor period of performance while the indexes are going up. That's the way that bear markets come in. They come in like a thief in the night is an old term that was used for this. And so keeping that in mind, let's move on now to looking at trend determination, trend analysis, because this, I think, is something that's most important. This is just an industry group. In this case, it's aluminum. Aluminum's been so interesting lately, but all these indexes, all these industry groups are cyclical in nature. They have periods of leadership and they have periods where they're lagging. And we want to be able to, in a very straightforward, simple manner, be able to define the conditions for leadership and laggards, and be able to do that and look at a lot of different setups, a lot of industry groups. And this is what this new Wyckoff market letter is going to do. I don't think I'm going to have time to get into it today, but we've organized it in such a way with Johnny Scan, who designed the scanning engine and really the format of the letter, but it was based on top down. indexes, sectors, industry groups, stocks, and then stocks under the different Wyckoffian characteristics. And so it's a very exciting way to be able to structure our analysis and get our eyeballs on the best ideas at a point in time. Here, and so keep that in mind as we're looking at this, because here we can see that there's an uptrend in the aluminum stocks in aggregate in this industry group throughout this period of 2016 to 2018. Also, here's relative strength. Very important concept here. Let me draw this out. So, because I love to draw stuff like a little kid. And so here is a rising trend in relative strength. Now, what does that mean? Because this is rising relative strength against the S&P. This means this group is outperforming the S&P on an aggregate basis over a period of time by staying above the long-term moving average. And this is whether you use a 30-day or this a 30-week. This is the 39-week, which I like. I like to break things up that way. So we're looking at 13 and 39 moving averages. I look at the 39 for trend determination. And as long as the relative strength line itself is above, it's rising 39. That's my simplistic definition of an uptrend, because it takes a lot of effort and time to get a relative strength line below its moving average and turn the moving average down. Keep that in mind. We'll come back to that. Same thing with price. Price is above its long-term 39 moving average. When you get the 39 turning down, which is the case here, and this is price, you get the 39 turning down on relative strength, and it won't happen simultaneously, but they'll happen very close to each other often, is that you get a confirmed downtrend. And when you get into a confirmed downtrend here, I'm moving my little tools around so that I can get at them better. Okay, so when you get the moving average and relative strength living below its moving average like this, what happens, this is my logic, and that is in institutions which need to have a large number of stocks and industry groups in an outperformance situation for a long period of time so that they can meet or beat the indexes that they're measured against. In most cases, it's the S&P 500, at least for the stock portion. And when you have the relative strength line below its 39, institutions start to remove capital from that theme. Think about that. So they will continue to remove capital, diminish the size of it. They may not be able to get out completely, but it'll become a smaller and smaller portion of their portfolio over time. This is what I believe is happening. And you can see that occurring here. And so, and this is the reason I take a long-term view, is because institutions think in a long-term view. They think in quarters of a year. And so they come in and they say, you know, aluminum's just not performing that well, hasn't for the last 6 to 13 weeks. It's not helping our portfolio. Why don't you sell some of our aluminums? And they'll get smaller because it's a boat anchor. It's a drag on their portfolios. And this is what's going on. So what we do is we organize our thinking around being on the emerging cutting edge of this, mainly because we have flexibility that institutions don't have. And we say, once we're below the 39 in price, once we're below the 39 on relative strength, we are going to go find another area to play in, another industry group to work in. And then when things turn, look here, above, we're not there at the beginning, but when it turns, and the moving average is up, price is above the moving average, relative strength, look at, turns up in here. Now we have a confirmed buy signal and we have persistency of trend. That's what we care about. Bernard Baruch said, they asked him, you know, why were you so successful as a speculator in the stock market? He says, because I took the 2/3 out of the middle. That's all I ever did. And That is exactly what this is designed to do. It codifies that process, that approach. And so this is what we've been doing. This is what I've been doing for, gosh, 20 some years, is just focusing on these industry groups and the nature of their trend determination, and just trying to find the best stocks in the best groups going up and the worst stocks in the worst groups going down. And I'm not much of a short seller these days, but a little bit sometimes I'll find things. But now I want to go on to another example. Let's just look at, for the moment, let's just look at energy. So energy here, note how the relative strength got into a downtrend here, flattened out for a bit, and then it started to go down again. But here, 2018, look at the persistency of the decline in relative strength, living below the moving average for all that time. And then back here, it starts to turn up. Relative strength gets above the 39. This is going to turn it up. And we wait for that to happen. And then look at how price jumps above right up here, or late 2020, and gets above and then stays above. Well, and now this is building a big base in relative strength, and price is moving up, and now it's starting to accelerate. We could be in the early stages of an important bull market in energy stocks. But here's the other thing I want to really emphasize to you, and that is that we want to drill in to these individual groups, even back here. Let me get my little pen again. And even back here when things are still just sort of like, you know, in the basing process in here, and go in and look at the, I know I make messes, is to look at the individual stocks this is a sector. Look at the individual stocks in the individual industry groups in the energy sector and find the leadership, because there are stocks that by definition must lead the way out of this decline and emerge first and show the way for the other stocks. And so we can go in and we see this starting to line up. We see the potential for the end of the decline of a very long-term multi-year downtrend in price and performance, relative underperformance, and we can go and drill in and find the leadership, the ones that are already turning up. And so that is our mission. And so here we can see down it goes. This is already down here, and we just say, there's other things to do. There's other places to go. So let's go work in those, but we're keeping an eye on these as we go along and waiting for that moment. Now, I hope what you're reading into this is that there's a great way here to be able to be a good risk manager. Let's take a look at the COPX. Now, another way to look at these is to actually look at the just a line chart. This is actually what I do. I have a system where it literally screens all these for me and then orders them for me so that I can see, you know, early, late uptrends, early, late downtrends, and so on. And then I can look at them that way. But here is copper. These are the copper miners, and this is an ETF. I love to look at ETFs in this framework. And very straightforward. It's not, the chart has sophistication in it, has relative strength, has price, has these trend characteristics. It's weekly data. So we're not ever getting in early. We are generally going to wait until we get confirmation. But here is the moment where copper starts to go from uptrend to downtrend as it turns below and turns the moving average down after it flattened out. Here's relative strength doing the same thing. My rule is, as long as you have, when you're in an uptrend, as long as you have one or the other of these, price or relative strength, either in the stock, the commodity, whatever it is you're trading in, and as long as you have one of them in a confirmed uptrend, I'll show you what I mean by that in a minute, as long as it's going up, then I give the trend the benefit of the doubt. I'm a trend follower. I'd stay with the trend as long as I can. I want to find one of these characteristics where I can get in a trend and be in it for a long, long time, multiple years. That's the best of all worlds for an investor or for, a speculator, is to be able to be in a trend for multiple years. Now, here, this is a perfect example. Look what happened with the COPX. COPX, the copper miners, I should say, is that here you have the moving average of price down, 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 and then right there it turns, okay? Even though you get these bulges above the moving average, the trend doesn't turn. It continues to be down. This is the reason we wait for reversal. This is why we don't get in early, okay? Here, and you can see that we were able to participate in this uptrend all the way through this until this point right there. And that's the point at which we say, okay, price is below a declining moving average, relative strength below a declining moving average, time to go somewhere else. Let's go do something else. And then look at the persistency of this multi-year decline. There was only one moment in this chart where the relative strength was even able to lift its head above the moving average for a period of time, not turning up the moving average, only until we got to here. But then once we got to here, we got a good year of an uptrend with a very robust dynamic uptrend. And I'll say this looks to me like reaccumulation in this area right here. It has classic characteristics. We'll keep a very close eye on this. And now the relative strength is getting back above its long-term moving average and could very well turn this up very soon. So do some point and figure work on this and look for the potential to start another new important uptrend. So that's very compelling. Now let's look at some other examples. And this is what we do to manage risk. So gold miners is kind of interesting here because they had an important day. Gold miners are on a sell. Now, all this angst about the gold miners for all this time. And let's just look at the characteristics here. On a sell here, on a sell here, downtrend persists for more than a year, here and here. And now we have a condition where we've had a very sharp jump above a declining moving average. May have to spend some time pausing, collecting itself, but this looks like a big base to me, potentially. It has the characteristics of a base, but you're now above on price and above on relative strength on the moving averages, but you haven't turned them up yet. We want to get to this place over here. Look, there it is. There's where it turns up. This is where it turns up. And this was a big, nasty decline in the COVID drop. Here we had a relative strength decline, but this is my case for being able to stay with it as long as it's going up. And so here we never did turn down the moving average on the relative strength. So that gives me the wherewithal to be able to stay with the position if I choose to. I have the option. And and in fact, this worked out really well, went up into mid 2020, and then we had this big decline, which it's still trying to digest. But it looks as though there might be some green shoots here for a potential turn in the gold miners. Okay, and we only have about a minute left. Albemarle is a really interesting one. Let's look at this. And notice how this gives us such a view where we can train our eyes so quickly to the key characteristics that we want to see and be able to see those. Because here's the thing, we're the ones responsible for our portfolios, even if we have money managers out there that are managing portfolios for us. And I used to manage portfolios with this methodology in my working days when I was an active portfolio manager. And I was basically managing based on the principles of relative outperformance with price and on these trends. And I don't see that it's ever changed from this. And so here's Albemarle, a chemical company that also mines lithium, very important company. So we went back, I'll let you go back. I wrote blogs on this in 2016. Beautiful base back here, we can't see it. But this uptrend, we got a great point figure count up here into these highs. Breaks on price, the 39 week, and turns it down in short order in early 2018. Relative strength turns down roughly around the same time. Now, persistency of downtrend. Look at the persistency for more than 2 years for this downtrend in relative strength and price. This really is something. And so all the way through here, and then we got another turn up, and we talked about this quite a while back. We looked at this again, big base in relative strength, big base in price. And so you can see that now we've had a beautiful uptrend, a year and a half in the making, more than or not quite 2 years. And now we're starting to move back below on price and relative strength. So this move might be over. So we are keeping a very close eye on this, but you can see what a beautiful job it did to get us into a couple of really good trends. And so with that, gotta go. That was really a great session. We'll do more of this. And thank you for being here, and we'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.